Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the today's class, we will be discussing RTP of CA Final Audit that is applicable for upcoming Jan 2026 examinations. I will be trying to discuss this in as much as less time as possible, and I'll try to give more explanation as possible within the limited time. Got it? Yes. Now we'll start with the MCQs. So if you observe for Jan 26 attempt, there are certain minor 5 amendments that the institute has given through this RTP, which I have already explained in a separate amendment video. The video you can find it here in the I button. Okay. Yes. So starting with MCQs, first case scenario based MCQ. Mr. Vivek was appointed as the engagement partner on behalf of Reliant and Co., a chartered accountant firm, to conduct statutory audit assignment of Zenith Components Limited, an unlisted public company engaged in the manufacturing of electrical equipment. During the audit, CA Meenal, one of the senior engagement team members, was given the responsibility to audit the matters as per requirements of Coro 2020. Okay, CA Meenal has been given responsibility to audit as per Coro 2020. Her major observations included the following: one of the buildings owned by Zenith Component Limited was revalued during the year based on valuation report from a registered valuer. So it is speaking about clause 1 PPA, right? Revaluation of assets require the registered valuer certificate. Yes. Increasing the aggregate carrying value of property, plant and equipment from 12.5 crore to 14.5 crore. So here we need to see whether the increase is 10% or more. So 10% you need to calculate on the book value. So book value of the PP is 12.5 crore. 10% of it becomes, so 12.5 crore plus 10% means 1.25 crore, right? So if you add this, how much it becomes? 13.75 crore, right? So if the revalued amount is more than 13.75 crore, auditor needs to report it, right? So it is 14.5 crore, so the clause is applicable here, so which is more than 10%. So yes, auditor will report as per clause number 1. Okay. Zenith Components Limited was sanctioned a cash credit limit of 5.25 crore by Unity Bank based on security of current assets. Now you observe this is related to clause number 2, working capital more than 5 crore rupees during the year. Do you remember? Yes, clause number 2 it is speaking about, which was reduced to 4.95 crore after 6 months. In this connection, the company submitted quarterly stock statements to the bank, which were in agreement with the books of accounts. So this point it needs to be reported in clause number 2, because the amount of working capital loan sanctioned is more than 5 crore. It doesn't matter even though during the year it has dropped below 5 crore. The thing that you need to see is whether sanctioned amount, okay, amount sanctioned is more than 5 crore or not, you need to see. Got it? Yes. Next, meanwhile, Reliant and Co was also appointed to conduct audit of State Housing Department. During the course of audit, Office of the Comptroller and Auditor General of India observed that prescribed law in the state defined a flat based on the following 2 criteria. Okay, see, this is unnecessary discussion. Okay, this they haven't asked any MCQ on this particular point. You just see what is meant by flat as per the given definition. However, it was noted that relevant database did not included a column for entering the area of building. Consequently, a certain matter of buildings were identified as flats, even though they had fewer dwelling units than the threshold limit. See, the thing they are saying is in the law, the definition for the flat is a particular definition has been given, but actually that definition, without following that definition, they have classified non-flats also flats. Okay, see, this is irrelevant for answering the MCQs. In the absence of data regarding the area, the audit team directed physical verification of these flats. The physical verification confirmed that these buildings were incorrectly classified as flats, resulting in the department under collecting water charges. Okay. Further, CA Karan, another partner, was engaged in audit of Ecotherm Power Limited, a listed company operating in thermal energy generation sector. As part of BRSR, company disclosed data on its total greenhouse gas emissions from its production outlets during the year and detailed energy consumption plan which it had devised for the upcoming years. Now, CA Nisha, an independent chartered accountant who had recently completed a certificate course on sustainability reporting, was approached by CA Karan for informal guidance on improving the company's sustainability disclosures. Impressed by her knowledge, CA Karan later recommended her name for the board of management of Navlok Cooperative Bank, a primary urban cooperative bank. Now, a chartered accountant who is in practice is permitted by ICAI to act as member of a board of directors in a urban cooperative bank, but you cannot act in rural cooperative bank. Got it? So since it is urban cooperative bank, she can accept the position, which was also one of their audit clients. CA Amit, another professional colleague, advised Nisha to refrain from accepting the post as it could amount to professional misconduct. See, since it is urban cooperative society, ICAI, the ethical standards board has explicitly allowed the auditor from accepting the member of the position as board member in the urban cooperative bank. You need to remember, it should be urban. If it is rural, it is not allowed again. Okay. Yes. Now, based on that scenario, let us solve the MCQs. As per provisions of CARO 2020, what should be the auditor's reporting responsibility with regard to revaluation of property, plant and equipment done by Zenith? You will report in clause number 1 because more than 10% increase has occurred. Now, they have given clause 1, subclause D or subclause C. It is subclause D, right? Subclause C deals with the title deeds should be in the name of company. That is subclause C. Whereas subclause D deals with 10% or more change, right? So option B, reporting is required under clause 1, subclause D of paragraph 3 since the company has revalued its PPE and amount of change exceeds 10% of the net carrying amount. Got it? It is not clause C. They are saying no reporting is required, no reporting is required. And option D says reporting is not required. No, reporting is required, right? Sorry, excuse me. Next, second MCQ, whether reporting is required under CORO 2020 in case of sanctioned cash credit limit, that is working capital limits. Here, yes, reporting is required under clause 2, right? Specifically speaking, clause 2 subclause B, right? Because the amount of working capital loan is more than 5 crore. So if you observe, option B says no reporting. Option A says yes, reporting is required under clause 2, subclause B, since amount is in excess of 5 crore. So option A looks good. We will also see remaining options. It says no. So this is wrong. This is wrong. Option D says yes, reporting is required under clause 3. No, not clause 3. It is clause number 2. Right. So option A is correct. Next, report of audit of state housing department by C&AG is likely to be submitted to. See, C&AG in case of audit of state government, it will submit its report to governor of the state. Correct? So option B, governor of the state. If it is central government's report, it will be submitted to president. Right? Yeah. Next, with respect to Ecotherm Power Limited, which of the following statement correctly categorizes sustainability reporting indicators? Let us see. See, there are two indicators, right? One is essential indicator, another one is leadership indicator. Essential indicator means that should be mandatorily reported. Leadership indicator, that is up to you. If you want, you can report, otherwise you need not report. Understanding? So leadership means than required, you are doing more. Essential is the required thing are you doing or not. So now they are asking you to identify which is essential, which is leadership. So basically they have given, if you observe in the case scenario, they have given reporting with respect to emissions made during the period and the future actions, right? So from these things, if you observe, emissions made during the year will be the essential indicator, and what you are going to do in the future, that is a leadership. About future will be leadership, correct or not? So option A says both the details of emission and future energy consumption plans are essential. No, emission in the current period is essential indicator, future energy consumption forecast is a leadership indicator, right? So the correct option should be, it is also saying both the details, so this is also wrong. Details of emission or leadership indicator, it seems. No, details of emission or essential indicators. So option D is the correct. Details of emission forms part of essential indicators, need to be mandatorily disclosed. However, plan for future energy consumption is only leadership indicator, right? Yeah. Next, fifth MCQ. Whether CA Nisha would be held guilty of professional misconduct if she accepts the offer to become member of Board of Management of Navlo Cooperative Primary Urban Cooperative Bank? No, since it is a urban cooperative bank, she can accept. So answer should be option A says it is permissible for CA in practice to become member of rural. No, it is permissible for CA in practice to become member of Board of Management in primary urban cooperative bank, hence CA would not be guilty. Yes, option B looks good. We will also see option C. Yes, it seems CA Nisha will be deemed to be guilty of professional misconduct, it seems. No, she is not professionally misconduct. This is also says yes, so this is also wrong. So option B is the correct option, right? Yeah. So by now the case scenario based MCQ is done. Now we will see individual MCQs. So during the audit of loan accounts of Varti Bank for the year ended 31st March 2025, you came across a borrower account of Star Limited with an outstanding loan of 1.7 crore, which was classified as NPA in the December. Okay, borrower made a partial repayment of 70 lakhs in March. However, remaining amount of 1 crore is still overdue. So some amount is repaid and still some more amount is pending as it is only. Now, despite this, bank has upgraded the account to standard as of 31st March. Is bank correct in upgrading to standard? No, it should be kept in NPA only, because of total 1.7 crore, only 70 lakh is received. Until and unless you receive this remaining 1 crore also, you should not classify it into standard. That should be kept in the NPA state only. Got it? So the action of bank is not correct. So option C, what it says, the account should continue to be classified as NPA since the entire overdue principal and interest were not settled before 31st March 2025. So option C looks good, right? Yeah. Next, during the audit of Beta Infrastructure Limited for the year 24-25, auditor CA Ramesh observed that company had lost significant accounting records, including invoices and supporting documents related to purchase and revenue due to fire. So, records destroyed due to fire. He performed additional audit procedures to obtain alternative audit evidence. However, he was unable to obtain sufficient appropriate audit evidence. Right? So, audit evidence not available through such procedures. Consequently, he could not obtain adequate audit evidence regarding several material items in the financial statement. So, regarding various items, he could not obtain evidence. So, misstatements in those items will be material only, correct or not? And they are pervasive also, correct or not? So since audit evidence is not available, misstatements are material and they are pervasive also, which opinion you will give? You will give disclaimer of opinion, understanding. See, here they are only saying material items, so if at all there are any misstatements in that items, that will become material, and they are saying several items. Several means in many items, so it is also pervasive, correct or not? So you will give disclaimer of opinion. So option A says qualified, wrong. B says adverse, wrong. C says EOM, wrong. D says disclaimer. Option D is correct, right? Yes. Next, MCQ 8. EcoSmart Technologies Limited is preparing its integrated report. Integrated report means 6 capitals, 6 C's for the year 24-25, focusing on its sustainability and ESG initiatives. The report highlights the following. Company has installed solar panels and rainwater harvesting systems at all its manufacturing plants. That means natural capital. So this point is focusing on natural capital. Next, it has developed AI based production optimization software that improves operational efficiency. So this focuses on intellectual capital. So they have developed a particular software using the intellect. So this is a intellectual capital. And third point speaks about employees are provided with specified training. That means human capital, right? Yes. Now what they are asking, which combination of integrated capitals is primarily represented in the initiative? I have already told you. First one is natural, right? So yes, natural. Next, intellectual, human capital. Option A is the correct option, right? Now the complete discussion of MCQ is done, right? Yes. So hope you understood the discussion of MCQs. Yeah. So if you are able to understand, if you feel that this video is benefiting you a lot, you convey me that this video is useful by commenting that the best RTP discussion. Let me know this in the comment section, because this will give me motivation, because I am recording in a studio. There are no students, so your comments will give me motivation to create more content of this nature. Got it? So what should you comment? You should comment the best RTP discussion. Got it? Yeah. Now starting with question and answers. Question number 9. RBC and Co Chartered Accountants is a large audit firm engaged in audits and assurance services across various sectors. The firm currently maintains audit documentation in both electronic and physical formats. However, during audit, it was observed that physical files are neither scanned and incorporated into electronic files. See, they are maintaining documentation in soft copy as well as physical. So in this particular situation, you need to scan the hard copies and you need to integrate them with the soft copies, and you should also cross reference them, correct or not. This is not being followed in the firm, it seems. As a result, documentation remains scattered with no integrated or centralized audit file for the engagement. Additionally, several audit working papers lack clarity on whether the information was obtained from the client or prepared internally by the engagement team itself. See, there should be a clear marking about whether the documentation is internally generated document or has it been obtained from the client. So that should be clearly understood by seeing the document, right? You need to mark it like that, but such a procedure they are not following, it seems. So this should be fixed. If this is not fixed, it means that you are not following the requirements of SQC1. So by now you should got an idea that this question is about SQC1. So in SQC1, which responsibility, sorry, which element of system of control this is speaking about? Element number 5, engagement performance. So in engagement performance, we have a lot of things again: engagement quality control, review, documentation, all these things. So from those things, this is specifically dealing with documentation aspect. In the documentation also, if you remember, a special case we have discussed with respect to scanned copies of documentation. So that special case of scanned copies of documentation is being asked in this particular question. This ambiguity raises concerns regarding the reliability and origin of audit evidence. How do you view the above situation from the point of view of a quality control system in the audit firm analyzed? So, first of all, whatever the documentation that you maintain, that should be properly safeguarded, that should be kept confidential, that should be having integrity, right? And that should be easily accessible, and that should be retrievable whenever you wanted. So by considering all these, you need to maintain the documentation correct. And in case specifically you are keeping soft copy documentation and physical copy documentation, then you need to ensure that all the physical copy of documentation are completely scanned by your team, right? So there should be policy and procedure in your firm wherein the team will completely scan the audit documentation, and there should be cross referencing made between the physical documentation and the soft copy of documentation. And finally, the third thing that you need to ensure is that whenever you wanted to retrieve that audit documentation, you should be able to retrieve it and print it whenever necessary, right? So these 3 points you need to write down with respect to scanned copy of documentation. Clear? So here you need to refer SQC1, the two documentation. In the documentation also, scanned. When scanning the audit documentation, what care has to be taken, what principles should be established by system of quality control with respect to this scanning of auditor documentation, right? And here you need to conclude that by seeing the scenario, the system of quality control is not proper in the organization. Got it? So this way you need to conclude your answer. Next, question number 10. Camel Manufacturing Limited is engaged in production of specialty machinery for automotive industry. The company operates in a competitive market and is under pressure to meet determined revenue and profitability targets to secure additional funding from the investor. So it is under pressure. The audit firm AJN LLP has been engaged to conduct CMLS statutory audit for the financial year 24-25. AJN LLP performed risk assessment procedure and related activities towards obtaining information in identifying risk of material misstatement due to fraud, and also evaluated whether there is an indication that one or more fraud risk factors are present. Analytical procedure reveal unexpected relationship potentially indicating fraudulent activities such as sales inflation by management to meet earnings target. Management is inflating sales by entering into sales agreement that include terms that preclude revenue recognition, or by invoicing sales before delivery. So there are certain fraud factors in this particular scenario. Now what they are asking, guide AJ and LLP to decide on the course of action in determining overall responses to address the assessed ROMM due to fraud at a financial statement level and assertion level. So by seeing this case scenario, you are feeling that there is high risk of material misstatement due to fraud. So you have identified risk of material misstatement due to fraud. Now what audit procedures you will design for this risk at the financial statement level and at the assertion level? See, firstly speaking about financial statement level, so you came to know that there are high possibility of fraud. Then what you will do, you will you will deploy highly talented, highly qualified, highly experienced personnel to conduct the audit of entity. That is the first thing that you will do. Correct or not? Next thing is, you will check whether the accounting policies that the organization has used, are they leading to fraud, or are they reasonable? This is the second thing that you will check. That will be your second response. And finally, you will include unpredictability in your audit procedure. So these three are your responses for assessed ROMM at the financial statement level. See, responses to assessed ROMM at financial statement level. What you will do, assign and supervise personnel taking account of knowledge, skill, and their experience. Next, evaluate whether selection and application of accounting policies by entity are reasonable and appropriate. And unpredictability, you will ensure there is unpredictability in your audit procedures. Next, audit procedures at the assertion level. So at the assertion level, if you have assessed Roman due to fraud, then what further audit procedures you will design. See, auditor shall design and perform further audit procedures whose nature, timing, extents or responsive to the assessed Roman. And in this particular situation specifically, they told that there is a high pressure on the management, so that point also you need to refer. So if auditor identifies management is under high pressure to meet ending expectation, there may be a related risk that management is inflating the sales. So in these circumstances, auditor may, for example, design external confirmation not only to confirm outstanding amounts but also to confirm the details of that particular debtor and whether actually that sale is in existence or not. So apart from normally verifying the amounts, you will also perform certain extensive procedures since you have identified certain Roman due to fraud. Got it? So these points you need to mention. Next, question number 11. During the statutory audit of Nature Care Limited, CA Vigilant has planned to attend the physical inventory count of the company. Nature Care Limited is engaged in production of pharmaceutical tablets and capsules. See, all this is rubbish. Okay, you can just read it. The actual question starts here. So basically the thing is, auditor wanted to attend physical inventory verification. Now whenever you wanted to attend physical inventory verification, management would have given certain guidance, certain principles that has to be followed by the people who are doing physical inventory verification. Now what guidelines management gave to the people who are conducting physical inventory verification, that guidelines need to be once reviewed by the auditor. Now we will see what guidelines the management has given. See, management has given these guidelines. The question that they are asking is, are these guidelines correct or any change has to be made in these guidelines? That's the question they are asking. Now we will read each guideline and we will suggest the change. Okay. Understood the context? Yeah. See, physical inventory counting to be supervised by warehouse in charge. See, management has kept warehouse in charge to supervise the physical inventory counting. Warehouse in charge for entire year, he will be having access to inventory. If you only give the responsibility of supervising inventory verification to that person only, then he will try to cover up the frauds that he has committed, the inventories that he has stolen. Correct? So you should not give supervising responsibility to warehouse in charge. Instead you should give it to some other person, most probably from finance. Okay, from finance department to one particular employee you should assign supervising responsibility, because the person in the finance department will not have physical access to inventory throughout the year, right? Yeah. So this change you need to suggest. Next, counting should not disrupt the routine process of raw material receipt or product dispatch. It seems no, whenever you conduct physical inventory counting, you have to stop all the inward and outward flow of inventory, because if you allow inward and outward flow of inventory, there will be a high chance that the actual physical inventory that you are doing might get disturbed. The management, they might manipulate the actual physical inventory counting with the help of the inward and outward movements of the inventories that is taking place simultaneously. So you need to stop inward and outward movement of inventory at the time of physical inventory verification. So this point also to be suggested in that manner. Next, teams of 4 members each or to count raw material, work in progress, and finished goods. See, they should have given a more clear guidance. Teams of 4 members means who? Okay, so teams from so and so department, right? Most probably from the finance department should be assigned the task of this particular activity. Got it? So this should be suggested in that particular manner. Next, quantities of material in drums to be estimated based on drum capacity. No, you should actually conduct weighing of that particular drum. You should not just estimate the inventory based on capacity of the drum. You should actually conduct how much weight that drum is weighing with the inventory that is present in it. Understanding? So you should suggest it, change the uh, thing as I told you. Next, quantities of work in progress to be estimated considering overall plant capacity. See, work in progress, there will be various stages of work in progress. If you see in this particular thing, they told that there are lot of stages in the work in progress. If you value or if you see the work in progress based on entire plant's capacity, you will not get a clear direction of the work in progress at each stage, right? So here what you should do, you have to conduct a physical inventory verification work in progress stage wise. So you need to suggest stage wise verification. This one, stage wise verification. Next, responsible officer should ensure that all areas have been counted. Okay, that is fine. Responsible officer, he needs to ensure that all areas have been counted, and you should also suggest that the inventory sheets should be signed. And if you see here, there is no discussion with respect to damaged goods, right? So if at all there are any damaged goods, how to deal with that particular damaged goods, that should also be guided here in these principles. Got it? So these changes you need to suggest. This is a general question. Understanding? Yeah, general means a practical question. Next, question number 12. Opaque Pharmaceutical Limited has outstanding long-term receivables of 415 crores as on 31st March 2024, arising from pending insurance claims for compensation due to supply chain disruptions caused by regulatory delays and unforeseen production stoppages. Some of these claims are under legal proceedings. See, company has to receive certain claims from certain people, and they are under legal proceedings. So still it is not yet confirmed. Legal proceeding going on means still it is not yet confirmed whether you will receive that claim or not. Okay, now while others are in the process of negotiating with the insurance companies, management has disclosed in the notes to accounts that these amounts are considered fully recoverable. How can management just say that these are fully recoverable, right? So if there are legal proceedings that they are going on now, CNA, see, management can say that they are fully recoverable, but there should be proper evidence for that. If there is a proper evidence based on proper proof, you are saying it is fine. Okay, now CNA statutory auditor has relied solely on management representations regarding the recoverability of these receivables. See, with respect to recoverability of these receivables, there are litigations going on. Management on the other hand told that these are completely recoverable. Now CA, the auditor, she has relied solely based on the representations made by the management. Management told auditor we will be able to recover them completely. Auditor believed just the written representation. Is that the correct procedure? No, you should never place reliance only on the written representation. Okay, you should not use the written representation as a sole audit evidence. Along with that, you should perform other audit procedures to obtain corroborative audit evidence. Correct or not? So here what CA Neha has done is not proper, and is considering inclusion of this matter in emphasis of matter paragraph. See, when can you include a matter in emphasis of matter paragraph? If the matter is properly disclosed in the financial statements, and there is proper audit evidence that there are no misstatements with respect to this particular matter that is already there in the financial statements. If these two things are there, then you can emphasize that matter in the emphasis of matter paragraph. But if you observe in this situation, first point is there. Okay, management has disclosed it, okay, in the financial statements that there is a legal claim going, but it is fully recoverable, like this management has disclosed. But auditor is not having complete evidence whether it is actually fully recoverable or not, because auditor has relied only on the representation made by the management, correct or not? So here in this situation, auditor should not include emphasis of matter paragraph until and unless she obtains audit evidence that whatever the representation made by the management is correct only. There are no misstatements in the representation made by the management. If such a audit evidence auditor obtains, she can include emphasis of matter paragraph. Otherwise, she should not include emphasis of matter paragraph. Got it? So here you need to refer to SA 580 and SA 706. Both these standards are covered in this particular question. Got it? So that's the answer that you have to write down. Clear? Yes. Next, question number 13. Moksha Limited has prepared prospective financial information for an upcoming expansion project. Prospective means future financial information. On review, the auditor finds that basis of certain assumptions is not disclosed. If you observe while preparing the prospective financial statements, on which assumptions you have prepared them, that should be disclosed, correct or not? You have not disclosed, it seems. So one of the point that you will consider as an auditor is whether all the assumptions, accounting policies are properly disclosed or not. Next, highly uncertain assumptions lack sensitivity analysis and the date of preparation is missing. See, date of preparation should also be present. This is also one of the point that you will see while verifying the prospective financial information, right? Next, in addition, a recent change in the accounting policy related to revenue recognition has not been reflected. It seems that should be reflected, right? In this context, what should the auditor consider while assessing presentation and disclosure of the prospective financial information and its underlying assumptions? So, first thing is you need to ensure that whatever the information is presented in the prospective financial information, that is properly presented in a understandable manner, right? And all the assumptions they have taken, all the accounting policies they have followed, whether all of them are properly disclosed or not, that is also one of the point that you will see, right? So informative and not misleading, clearly disclosed in the notes, assumptions are adequately disclosed, right? Date as of which prospective financial information prepared, that should also be mentioned. Basis of establishing points in range is clearly indicated and the range is not selected in a biased or misleading manner. And if there is any change in the accounting policy of the entity from that of disclosed in the most recent historical financial statements, whether the reason for such change and the effect of such change on the prospective financial information has been adequately disclosed. So if you observe, of these 6 points, almost 4 points are already mentioned in the question itself, correct or not? There I have kept arrow marks. So already 4 points are mentioned in the question itself. The remaining 2 points you need to write. Getting it? Yes. Next, question number 14. See, during the audit of Long Limited, the auditor came across following instances. Finance team relies on system generated customer aging report while reviewing overdue balances of trade receivable. What question they are asking? So in these 4 situations, identify the type of IT dependency. IT dependency means you have depended on the information technology for a particular purpose. What are the various purposes for which you can become dependent on information technology? For report generation, for security purpose, for automated controls, right? So these are some things, and for calculations also, right? For these are some things for which you can become dependent, right? IT dependencies can arise. Now they are asking, from the 4 situations, each situation comes under which dependency? Okay, let us see. So the finance team relies on system generated customer aging report, it seems. So they are only saying it is a report, right? You are dependent on information technology for report generation. Next, payroll module is designed in such a way that person entering employee attendance cannot approve the salary disbursement. So they are providing a security here, right? By segregating the duty. Next, The purchase order system of the company does not allow processing of duplicate vendor codes and automatically rejects entries where the vendor register GST number is already present. So it is a control that is implemented within the application itself, which is a automated control, right? So you are dependent on information technology for automated control. Next, ERP system automatically computes depreciation. So computes means calculation. Simple, right? So these are the four IT dependencies that they have discussed in the question. Next, question number 15. TRP Limited is a holding company with three subsidiaries, namely T Manufacturing Private Limited (RP). While auditing the consolidated financial statements of TRP Limited, auditor observed that although management of all subsidiaries have provided written representation, no formal written representation has been provided by management of parent company. So if you are auditing consolidated financial statements as per SA 580, you need to obtain written representation from parent company saying that they have fulfilled their responsibility for preparation of financial statements as per the applicable financial reporting framework, right? And further, if you see, they should also give a written representation that they have identified all the related party transactions, they have identified all the segments for segment reporting purposes, right? And whatever the current period adjustments and permanent consolidation adjustments that were made, that are proper only. Like this, they have to give written representations, right? So this question is a combination of SA 580 and group audits, if you are able to observe. So what they are asking, acknowledging its responsibility for true and fair presentation of consolidated financial statements. Okay, it seems that management has not given such a representation which should be given. Furthermore, the auditor could not find any evidence that management of parent company has approved the consolidated financial statements. How should the auditor of parent company deal with this situation? See, he should request the management to please give written representation. If management doesn't give written representation, what you will do, you will show impact on the opinion, correct or not? Yes. Next, Fairbank has appointed CA Ria as statutory auditor for the financial year 24-25. During the audit, she observed the following: pending cases with supplier amounting to 2.5 crore, dispute with ex-employees regarding retirement benefits, ongoing tax litigation with potential liability of 3 crore. So all these are claims against the company, right? Now, considering the above, CA RIA is concerned regarding claims not acknowledged as debt. State the audit procedures CA RIA should perform to verify claims acknowledged as not acknowledged as debt. So this is a direct question. You need not analyze the question. Just you need to write down the points with respect to what points you will verify with respect to claims not acknowledged as debt. So you will examine relevant evidence, review minutes of meeting of board, ascertain from management status of those claims. So is the status confirmed? Is it turned into liability on us, or is the status still continuing as a contingent liability only? You need to ask for the status, and a review of subsequent events would help you to identify whether it has turned into the liability. Debt not acknowledged as sorry, the amount not acknowledged as liability, has it turned into liability? That you will get to know by going through the subsequent events. Next question, question number 17. Comptroller and Auditor General of India appointed Sharma and Associates, a firm of chartered accountants, to conduct performance audit. So in performance audit, what will you see? Three is economy, efficiency, effectiveness. These three things you need to see. Of NAL Limited, a public sector undertaking of Government of India. The audit was conducted with the objective of examining whether all expenses of unit were in conformity with public interest and accepted customs. So this you will check in propriety audit, correct or not? So the expenditure that is incurred, is it in the public interest and the accepted customs or not? You will check in propriety audit. But they have asked for performance audit. So is the audit that is done by this particular auditor, is it correct? No, it is not correct. However, audit report submitted by the firm was rejected. Of course, they will reject. C&AG asked for performance audit. You have done proprietary audit. Will they not reject? Of course, they will reject. Whether action of C&AG is justified? Yes, it is justified. Why it is justified? You need to explain. As per performance audit, we will verify 3 years. But in case of the situation, he has done proprietary audit, so they have rejected. It is well within the proper action is taken by C&AG, like this you need to explain. Next, question number 18. During the course of audit of Limca Limited, CA Rajan observed frequent changes in accounting estimates of receivable, delays in providing information requested by management, including altered documents. He also noticed discrepancies between company's records and external party confirmation. These factors made him suspect possibility of fraud in the entity. Yes, all these are the factors that will raise suspicion about fraud in the entity. So all those factors he only provided in the question. Now, identify the common indications that may alert an auditor to existence of fraud considering the given situation. Also explain 4 elements of fraud, often referred to as fraud diamond. So what are the 4 elements of fraud diamond? First one, opportunity to commit fraud, incentive to commit fraud, and rationalization of act. And third one is capacity or the capability to commit the fraud. These are the 4 things that we'll discuss in fraud diamond, right? Next, Green Tech Manufacturing Limited, engaged in production of electronic appliances, has been facing criticism from environmental activists. Environmental activist means it looks like principle. Which principle? From BRS the reporting. Principle 6, right? Protection of environment, I guess, right? Protection of environment. So, and local communities for its high energy consumption, discharge of untreated industrial waste, and dependence on non-renewable resources. Considering the same, the company's management now wants to strengthen its environmental responsibility practices and align them with the national and international commitments such as Paris Agreement and National Action Plan on Climate Change. So we have identified the element, principle number 6. Identify the principle 6, which is being referred to in the case. Also state the core elements associated with this principle 6. So with the principle 6, there are 6 core elements. All the 6 core elements you need to write down. This is a direct question. Once you identify which principle it is, you can write down all the core elements in that principle, right? So it is principle number 6, which is protection of environment. So if you see, yeah, protection and restoration of environment. Yes, protection and restoration of environment, principle number 6. You can write down all the 6 points. I told now 6 points will be there in the principle number 6. All the 6 points you can list out. Next, question number 20. Aditya & Co, a firm of chartered accountants in practice, has been approached by Skill Development Council of Government of India to conduct assessment and performance audit of its various training centers. See, as per the Ethical Standard Board decision, auditor can accept the engagement to assess performance of Skill Development Board of the government. So this engagement, it can be accepted by that particular chartered accountant Aditya and Co firm. There will not be any misconduct. So let us see what's the question they're asking. I guess that's only the question they're asking. See, would accepting this assignment amount to service prohibited for members in practice? No, it is not prohibited. Okay, you can accept the engagement to do performance assessment of Skill Development Council. Okay, yeah. Who has permitted the recent Ethical Standard Board decisions? Next, Puran, a practicing chartered accountant, uploaded educational videos on accounting and auditing topics on YouTube. Okay, you can upload. There is nothing wrong in it for the benefit of students and young professionals. In these videos, he introduced himself as partner in Puran and Associates. This is wrong. You should not mention your firm name and displayed the firm's website also, address also, and his contact details also in the description of videos. Comment with reference to provisions of Chartered Accountants Act. So Uploading video, not a problem, but making a reference to your firm name, giving your address, contact details, all these amounts to solicitation. Solicitation of work. Solicitation of work is covered under Schedule 1, Part 1, Clause 6 or 7? 6. 6 covers the solicitation of work. Got it? Yes. So, as per this particular clause, he will be deemed to be guilty of professional misconduct. Right. So, this is the complete discussion of RTP of CA Final Audit for Jan 26 examination. So, if you feel that this video was helpful to you, this information is useful to you, then you need to comment to give motivation to me to record more content of this nature by mentioning the best RTP discussion. Got it? Yes. So I'll be winding up this video as of now. We'll meet in the next video. Until then, take care. Bye bye. See you.